Hey, Dan Passarelli here. Well, we're coasting right into the close here as I record this about 25 minutes before the close. Market's down a little bit, and it's interesting because leading up to tomorrow's Fed announcement, we had a range thus far. Maybe it'll grow before the end of the day here, but we had a range of about $6 a share today in SPY. Now I find that interesting because going into the number tomorrow, about there's about a 2/3 chance priced into the Fed funds contract of a 50 basis point hike and only a 1/3 chance of a 25 basis point hike. And those are big stakes. We only get a 25 basis point hike, and man, we can see some massive movement to the downside. We're going to need the 50 basis point hike in order to not sell off hard. And if we get it, we could take off to the upside or not. It all depends on what Powell says afterwards. We probably would take off to the upside right afterwards, but then it's going to be contingent on what Powell says. So I find that very interesting. We have this $6 range. And if we look at the historical volatility here, just the range that we've been living in, it's 13.7 for the historical volatility. If we go over to the options for 7-day options, we can buy a 1 week out, a 15.5 volatility, which is just really slightly elevated. I would expect volatility to crush to about maybe 12 after the announcement, so only about 3.5 points. And basically, if you were long this straddle, you would only need a little over a $10 move to break even from an at expiration break even, let alone that the volatility is going to stay high while Powell's still talking, and we could get some pretty massive movement tomorrow, especially if there's only 25 basis point hike. All you need is a $10 move in either direction. We had a $6 range just today before the announcement. I find that to be very, very inexpensive volatility. Now, if you look at the volatility chart, the volatility is a little bit above where it's trading, where the historical volatility is, but we're really just trading it for the 1-day move. This is not a buy and hold straddle. Now, okay, I would say that from an event trading standpoint, that SPY straddle's inexpensive, but take a look at the SOXL. This is the Direction Semiconductor Bull 3-time ETF. If you look at this, the implied volatility of this is 113. You can buy a 32 strike straddle, 10 days to expiration at 113 volatility when the historical volatility is 134, and this is before the announcement. You price in a 1-day move, event risk move, and this is an absurdly underpriced straddle. So I bought small, the SPY straddles. I bought bigger, the SOXL straddles, and we'll look towards taking them off ideally before the end of the day tomorrow. Good chance I could hold on to some of the SOXL straddles that I have, but trying to get out of at least half of them tomorrow. So there's crazy opportunities, crazy beneficial edge-based opportunities out there for buying volatility going into this number. So that's what I'm looking at today. I'll give a commentary of the Fed announcement shortly afterwards tomorrow, probably while Powell is speaking. So hang tight. Until then, this is Dan Passarelli, Trade Smart.